You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to rock out. Yep, it's Monday. It's noon Central, 1 p.m. Eastern. Time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are consuming this program right now. If you haven't, headed on out and subscribe to the full kit and caboodle. What are you waiting for? It's only been, 13 years, at least for the network. Not for this show, of course. But it's been quite a while. A lot of great content for you guys to sink your teeth into. The network, the best place to get it. Subscribe on all your major platforms, of course. Grab the app. Or maybe stream on the website. A lot of you guys are more and more you liking the YouTubes these days, which always cracks me up. Never was our first platform to think of distributing. The fact I forgot we had a YouTube channel for a while there, so I started seeing all you folks saying you liked it. So, hey, if that's how you like to consume it, head on out there, enjoy it. Who are we to judge? Just make sure, however you listen, whatever platform it is you listen on, make sure you leave a comment, a question, or, well, for those platforms, really, reviews. Send the questions and comments other places. Those platforms, leave reviews so that other folks can continue to discover this fine program that hopefully you are enjoying. And joining me on the program, hopefully they're enjoying it as well. I guess we'll find out. First off, let's go out to that sleepy provincial hamlet known as St. Charles. We are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program on this fine Monday, sir.
Always happy to be here on a fine Monday indeed.
Indeed. And also joining us, who knows? Could be from a small town that changed America out here in the hinterlands of Chicago. Could be at a Texas roadside barbecue near you. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Lyon Capital. Mr. Meatball, welcome back to the program. How's that southern drawl coming along?
I'm looking at you from one of the 10 towns that changed America. America's most perfect planned community. Riverside, Illinois. I'm staring at my backyard and enjoying the greenery starting to explode from the suburban backyards and front yards today. Flowers aplenty. Those April showers are starting to form their Mayflowers. It is a wonderful day to be social distancing.
Yes, social distancing. I do have to say, before we progress, that just the mental image I have of you right now with a 10-gallon hat and a Texas twang just brings a smile to my face, sir. It sounds pretty funny.
Well, you forgot the chaps that I'm wearing.
Oh, yes,
now,
the chaps and the spurs. That's a given with the hat.
Right. Well, I'm not wearing any pants with the chaps. So
that's also a given.
Nice.
That's also
pretty nice look. I'm like that naked cowboy from New York.
What are that guy's doing in social distancing? With that thought lingering in your heads, listeners, let's head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is the portion of the show where we break down what the heck is lighting it up out there on the tapes. Bit of a red start to the week after a historic upside week last week. Giving some of that back today. We saw kind of mixed news over the weekend, a historic number of deaths and hospitalizations, of course, which is never good on the pandemic front, but also maybe some of those, at least hospitalizations, maybe, question mark in quotes there, starting to crest in certain areas, even though the death rate is still horrific by just about any standard you could measure out there. Of course, some of the big news on the financial front is OPEC finally got its act together to make a production deal. Now, of course, one of the things exacerbating this sell-off in crude was this kind of absurd price war going on between Russia and the Saudis out there. A lot of it aimed, of course, at trying to shut down the U.S. small shale oil producers, which have really sparked a revolution in terms of cost and efficiency on the crude production side. But, of course, they struggle below $40 a barrel. OPEC knows that. Russia knows that. The big oil producers in the U.S. know that, too. So a lot of them, while they were making maybe some public waves about these prices, didn't mind a little bit of a protracted and prolonged cheap prices. They want to squeeze some of these guys out. Maybe big players in the U.S. here can start gobbling up some of those ones that start going Chapter 11 as well. But enough was enough. They came out this weekend and finally decided on a production cut. They're cutting 9.7 million barrels per day through May and June. It also outlines that agreement, 8 million barrels of per day cuts that are going to be extended to the end of the year, and 6 million barrel per day cuts through April of 2022. Now, you might say, wow, that's a ton. Let's get out there. But remember, they were talking even more in some of the early run-ups to this decision. Remember, back on Thursday, there were reports even more barrels a day were going to be cut. And whether that was even enough even then, they came out around the 10 million barrel a day level. And as you said many times, again, listen to TWIFO every week if you want a full breakdown. We talked about it last week, too. They were still kind of fading the upside calls and things like WTI. And the market, for the most part, any chance there's been a blip to the upside in crude, they've pretty much taken that opportunity to fade it. And we're kind of seeing that again today. Crude's up. WTI's up. It's at about a little north of 23 handle. But given this historic news, one of the biggest cuts pretty much we've seen in recent history, you think crude would be up quite a bit more. Yet it's up about 1.5% right now. And it's kind of wavering at that level. So again, maybe that fade is in. So that, of course, whether that cut is enough, clearly weighing on the markets today. We also have a lot of mixed metaphors, mixed opinions coming out, which, again, makes a market, but a lot of that weighing on the market as well. We've got folks coming out of the Fed saying we should be ready for 18 months of shutdowns and a, quote, long, hard road ahead. We got Goldman coming out saying, hey, maybe the worst is over. Their strategists getting together saying the worst of the market rout is behind us, quote, unquote. They say the previous near-term downside of 2,000 for the S&P no longer likely. Now their year-end target is 3,000. That puts us up about 8%. So they're saying they think, given the flattening of the viral curve, all these other things, they think that's the worst. Of course, they put the caveat in there, as all good prognosticators do, that if this second wave happens, if we reopen too early, that could throw all this out. We have folks out there now of INTL FC Stone saying if you look at just basic discounted cash flows for the S&P 500, that puts the S&P's fair value at 1,800. So well shy, nearly 1,000 handles shy of where we are right now. So a lot of mixed opinions coming into today. All of this seemingly weighing us all to the downside here. We're seeing our old friend, the VIX cash, hovering right around a 43. That puts it up pretty much unched from where it was last show, up about 1/4 point. Or it's actually ticked up a little more. It's closing on a 44 now, so that puts it up about 1.25 points. So roughly unched up slightly from where it was this time last show. Our old friend VVIX at about a 139 puts it down about a point or so. Again, kind of almost unched from last show. And our old friend VXX down to about 41.3 or so. That put it in about a handle from where it was this time last show. That ticking up as well now, up about 0.5 point since right before is the show time. So that puts it down about 0.5 point from last show. Let's go around the horn. Let's go the way we came. Let's start with the uncleist of Mikes. Mr. Uncle Mike, so not an Uncle Mike kind of day out there in the market, but what's your take on what you're seeing out there so far, sir?
Well, a couple things. First off, in terms of the oil deal, I think it's good. I think it's a good deal overall for our economy. But with the price of the oil stocks or my XLE as well as oil itself, I still think that the price isn't really going to have a lot of upward movement until we start getting demand again. If there's no one that wants to buy it, meaning everyone's still just staying home and we're not able to put gas in planes and gas in cars and whatnot, I don't really think it's going to go up very significantly until that happens. So I was on the phone with a client earlier today just asking me my take on the oil deal. And I said just those same things, is that do we think that some of the oil stocks are going to come up now because of that? And well, yeah, I think so in time, but I think that until we get demand, it's not going to happen. So that's kind of my take on that from that standpoint. The other concern with which I have for this market at this point is that if you're a bear, and if you look at where the market started selling off, SPY in particular, around the 339 level, and you look at where the market bottomed out at the 218 level, and where we closed on Friday, we had pretty much a 50% retracement on a bearish trend. Now, with my rules on my aggressive trading, I'm out of this. I'm 99% out of this market. So it's not of major concern for me with that. And on my risk reversal strategies, my lines in the sand are still another 10% to the downside. So from that standpoint, as an option trader, this really isn't much of a concern to me for those two reasons. But with that, and for my buy and hold holdings, well, buy and hold means buy and hold, and I'm a disciplined financial advisor, so I stick with what I say. But with that, the concern with which I have on market in general is that we got back half of what we lost. And until we break through this 278, 280 level on SPY, I think it's going to be kind of a tough nut to crack. Now, once we crack it, I think there's a lot of reason for the upside, and I'll still be the eternal bull with which I am. But in the near term, I got to be short-term cautious for those reasons. So that's one thing with which I'm seeing right now. The other thing is with corporate bonds getting a little bit of relief last week. You see LQD going up fairly significantly, as well as some of the municipal bond funds across the country are as well. So the Fed said that they would basically be a put option to them, from what it sounds like. Not really a put option, but they would give some relief to the bond buyers. And so that's kind of a big issue right now, seeing where that comes out to. And along with that, there's also this thing called the VIX, which I'm looking forward to hearing what Seabass has to say on that.
All right, Mr. Uncle Mike. Since you mentioned our favorite newly minted Texan, still just cracks me up. Mr. Meatball, sir, what is, light up your tape out there, and a somewhat unched overall day from a vol perspective, not from the market perspective. And what are your crazies in the Pit Chat and the Vol Trading Club? What are they up to these days?
You know, I think it's telling that, and this has kind of been our big discussion point. I think it's telling that vol sold off on a sell-off and basically borderline rallied, at a minimum, did nothing on a giant rally, which tells you kind of where the market is in terms of this overall, its overall approach to things. I think we're setting up for another week where we could be down in the week and vol could be down. I'm still getting a big yellow light on all my indicators. All my indicators say, you know what? Vol could go up, vol could go down, market could go up, market go down. There's not a lot of direction. I would note that, coming off a long weekend, coming off down $55, you can make a pretty strong argument that there's really not a lot happening in VIX today, or VVIX or the VIX options. Volume's pretty light as a whole. It feels light. You know, it's amazing how even just sitting at the screen, I can tell that without looking at volumes, that volume is pretty light, and it is indeed not a lot of oil is a little heavier today, but VIX volume is way down. SPX volume is down. SPY volume is down. Anything that trades with any real conviction, volumes are super light today. And so I don't know. But we kind of saw the same thing last week, low volume. We're only down 2% today. And we could be down 2% tomorrow. Who knows? But a 2% down day is going to be a 32 VIX. And we have a 43 VIX, which tells us that either we have another leg lower, or we're starting to get ourselves efficiently priced. You could see vol come off a little bit more. We could definitely see the VIX get into the 30s. I think that the 20s that I know people are looking for is a giant bridge too far. A giant bridge too far. And one more thing. It is VIX expiration this week, which is something to be aware of. And that is, I think, something that people should have their eyes on. April expires in 2 days. So keep your eyes on that one, folks.
Yeah, I'm still amazed on people out there who are listening to our vol shows or this show, and we're trading those products out there. Forget that the VIX kind of has its own rules of engagement when it comes to expiration and things. So something to be cognizant of if you're out there slinging in the vol space these days. Speaking of slinging, Mr. Meatball touching on volume, not exactly blowing the doors off. Let's see exactly what's up out there. Let's start in the major indices. VIX, as of a few minutes ago, well shy of the 200K level, about 186,000. Again, if we had seen another day, let's say a month and change ago, we were just out of the blue off 2%, probably would have seen a lot more volume on the tape. That's also reflected out there in the ADV. Remember, VIX ADV skyrocketed, got up to well over 1, up to like 1.5, maybe you think a little bit north of 1.5 million out there. Now it's pretty much come right back down, got cut almost in half. We're shy of 800K out there right now. 793,000 is the ADV. In VIX, still strong, still robust, but a pale shadow of what it was, let's say, a few weeks ago. SPY closing in on 3 million contracts right now, about 2.9 million. The ADV, not quite 6.5, pretty close. Still pretty robust overall numbers in SPY land. The S, 582,000 contracts. The ADV, not even 1.75 million, 1.73 million. So starting to see a little bit of a overall volume hit out there in the S. You like to see usually the S north of 2 million on some robust days, and the ADV a little bit light of that these days. But again, we are still in somewhat unprecedented waters from an overall liquidity and electronic and indeed volatility perspective, so maybe some of that to be expected. The Qs at about 334,000. The Qs actually robust. The ADV in the Qs actually ticking up a little bit, up to 812. So the Qs still been doing decent paper out there. And the Russell, a.k.a. IWM, that's another one that's been leading the charge to the upside, leading the charge to the downside. If you didn't pay attention to small caps before all this madness started, you probably are coming out of it, because any given week, pretty much small caps are leading the equities in whichever direction they're moving. So something to watch. IWM reflecting that. 325,000 contracts on the tape right now. Nearly 700K out there. 686,000 is the ADV. So pretty robust ADV out there in small cap land. Let's move on out to the single names. See what it cost you to break into the top 10 today. Mr. Meatball kind of right here looking at about $1.16 to break into the top 10. It's been about $1.70 or so of late. So that's pretty light out there as well. That gets you all the way to Boeing. Our friends across the street out there, 116,000 contracts. Number 9, Delta Airlines at about 117,000. Number 8, the old Netflix at 142,000 contracts. Number 7, Softy. Softy still out there just loving itself some pandemic-inspired markets out there, because it's been in the top 10 pretty much ever since all this started. It's at number 7 right now, 164,000. You got your Skype, you got a lot of your teleconference, you got your distance working, all these other things that are kind of right up their wheelhouse, as well as probably a wee bit of gaming going on. Xbox Live probably getting some good traffic these days. A lot of things in Microsoft's wheelhouse that are pretty conducive to what's going on right now. Number 6, AMD, also another stalwart out there, which is kind of interesting. I guess a lot of hardware demands going up out there, 184,000 contracts right now. Number 5, Ford, a good old Ford out there with how many? 193,000. Let's see what Ford's up to today. Ford threatening that 5 handle again in the dark side direction at about a 507, off about 30 odd cents, or about almost 6%, about 5.6%. Ford has been having some challenging times. Of course, it's well off its lows recently. I mean, it was threatening that 4 handle not too long ago. Then, of course, it rallied up to about 570 or so. It's like that's the near-term high, pretty close to it, about 569. And then kind of peaked off that, now back down about that 5 handle again out there. Number 4, Amazon, 201,000 contracts. Number 3, Bank of America, the other BA name with a C at the end, 245,000. Number 2 here, the mighty Apple has fallen all the way to number 2. That puts it at 280,000 contracts. That means number 1's got to be the old Tesla, lighting it up out there again today, 396,000 contracts in total in Tesla land. Let's move on again. We've been hinting at it for a while, but it's back, listeners. So if you'd like to sink your teeth into a little bit of meaty micro, and these days, these numbers are probably more important than ever because it's going to show really the true breadth of the damage we've seen out there in the economy. Of course, I'm talking about earnings season. It's back, baby. It's back with a vengeance this week. Kicking it off, we got some big names popping off this week, including on the coronavirus front. We've got Johnson & Johnson. They're out there working on a vaccine. They're reporting on Tuesday, so we'll probably get some insight into that there. Abbott Labs, our local name here out in the burbs, of course, leading the dance on the quick testing side of the space. They're going to pop off on Thursday, so if you want some corona-related names, there you go. Also, just in terms of what's going on from a financial perspective, the banks are going to kick us off. We have a lot of those big names popping off on Tuesday. You got JP Morgan Chase, Wells Fargo. Wednesday, Bank of America, Citi, Goldman, PNC, you name it, U.S. Bancorp. Bed Bath & Beyond as well. You can see how they're faring in this environment. Probably not too well. You can hear just how badly, and also, more importantly, what their guidance is going to be coming out in a little bit there as well. Thursday, we got Rite Aid, another important name. Probably faring all right in all this because pharmacies have been pretty active of late. You got BlackRock, BNY Mellon on Thursday. Charles Schwab, of course, maybe get some more insight into what the heck is going on with that will they, won't they merger dance out there. Citizens Financial on Friday. If you like those earnings move and earnings move results reports, well, we got them for you. Hitting the tape as we speak, getting up there on the optionsinsider.com, hot off the presses. Check it out, listeners. Head on over there. Click on the Options News and Articles tab to begin your journey out there. Of course, he's coming to you from our friends over there in Orat's Land. Let's pick a couple. Let's see. We're talking about Schwab. Let's check out Schwab here. Time of this report, they were at $36.54. They were pricing in $2.55. Get this, listeners. Their past earnings move less than $1, 96 cents. So that's a pretty rich straddle, almost 3x their past aggregated earnings moves. So something interesting, perhaps, afoot out there. Goldman was at 184.25 at the time of this report. They were pricing in $6.62 for an earnings straddle. In the past, they've delivered less than $5 for 97. Let's go to JP Morgan. They were at almost 103, 102.76. They were pricing in $3.43. In the past, they've delivered about 168. So pretty much 2x out there as well. J&J, we're just talking about them. They're at 141.25. They're pricing in $2.82. Unlike the other names, not that rich. Only they've delivered in the past $2.64. So pretty much in line there. Let's see. Abbott Labs here. They were at 86.04 time of this report. Pricing in $2.43. Past reports $1.85. So little rich out there in Abbott Labs. People are waiting to see what the deal is with this testing out there. Let's look at a couple others out here really quickly. Let's go to Wells Fargo. Wells Fargo was $33.20. Time of this report, they were pricing in $1.50. That's almost 2x their previous earnings moves of 78 cents. So a bit of a theme here, particularly in the financials, listeners. Pricing in a lot of juice. Probably not terribly surprising given where we are right now, but a lot of juice to be had out there in a lot of these financial names. A little bit less so on the healthcare side, which is kind of interesting. If you want this analysis and a lot more, the Options Insider is the place to go. We got the new earnings season report up there too. Obviously, it's kind of light right now. Haven't had a lot of names report yet, but once they start reporting, that will start filling out that report with a lot more info for you. Speaking of more info, let's get to some of that with a little bit of the weird and the wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
everybody. Welcome to the Odd Block, the portion of the show where we break down what the heck is going on out there on the weird and the wild side. Usually this is where we unleash our Eye of Sauron, and we have done that. We'll get to that in a little bit. But first, the meatball. He's been kind of busy out there. He's not just wearing his chaps and his hat. He's actually out there scanning for some fun prints. Mr. Meatball, I hear you got some fun stuff for our listeners. So what does your Eye of Meatball have in store for us today, sir?
Well, I was using our chat to give Mike some ideas of things that I was looking at. And, I think that you will see these as unusual activity here shortly. I am noticing that there's some decent open interest in some of these industrial names that, just a little bit right now. But take a look at the U.S. Steel X Jan 8 puts. There is some put sellers there today, and there's been a lot of put sellers over the last few weeks. And it looks like some smart people realizing that, sometimes in these inexpensive stocks, when the vol gets ridiculously crazy, as in 75%, you can actually do better selling a at the money or in the money put than actually buying the stock. So, for instance, these Jan 8 puts, and this is, I'll let Mike, I'm sure Mike will have some ideas on this. The Jan 8 puts are $2.50. So here's essentially I can buy U.S. Steel for, what is that? That's $5.50. And I outperform owning the stock all the way up to $10.50. I think that's a name that there's no way the U.S. government lets go out of business. I think they're the lone steel producer left in the United States, aren't they? Who else makes steel in the United States?
The well-known Super Duper America Steel Corp. You never heard of them?
Super America, is that? I think that was the bad guys in Team America World Police.
I think you're right.
So that's a name that I think is a really fascinating one as an industrial that has been absolutely pounded. That I'd want to take delivery for 5.5. And there's no way that they're not going to get bailed out or boosted by the U.S. because basically they have to get their steel from the Army needs to get their steel from the United States. So it's kind of like a guarantee. Alcoa, very similar setup. If you like those, we talk about the oil. Those are two names that I think are really fascinating in terms of, something from an odd block perspective that I think should be producing some odd blocks. So I want everybody to put those on their scanners. And when we start seeing the put sales come in, which I think we're going to see, you can give the meatball a big, oh, he told me so.
We will do exactly that. And you're right, we have been seeing a lot of talk of, more protectionist type things in the wake of this, trying to produce more things domestically here and be less reliant on international names, re China. So that could certainly play a role out there in names like U.S. Steel. Interesting stuff. Speaking of interesting stuff, let's see what our Eye of Sauron is interested out there in today. Let's kick things off. Union Pacific, ticker symbol UNP, trading 145.62 right now, off nearly $3 or about 2% out there. It's a name that's kind of had pretty stable year. I mean, a year ago they were trading about 167, and they rallied up to about 175, and they kind of hung out in that 175 range. They dripped down a little bit, 155, and back up to 170. They pretty much hovered around that 170, 175 range for the better part of the year until, guess what? Until February, listeners, mid-February. Guess what happened mid-February? Of course, all this madness started unfolding out here. A lot of transport, a lot of rail having issues across the board, and demand for goods certainly skyrocketing, but perhaps the logistics a little bit challenging out there. Either way, the stock taking a hit, went from about 181 or so, so it actually traded north of that 175 for a little bit, all the way down in the great nadir there of 114. So that thing just sold off about 70-odd handles or so, listeners, in the span of, about a couple of weeks. And then, of course, getting in that V-shaped mode, rallied right back up within a week or two. It was trading 139 again. Right now, where it is right now, 145.85. Just ticked down a little bit again out here. So let's see what our Eye of Sauron found out here in good old UNP. And it looks like some upside, but perhaps not the upside you might think. Of course, given this market, I could understand why. This is pretty wide. These are the June 165s. Listeners, so about 20 handles out of the money, pretty close to it, going up 12,000 times for $2.96. Now, if you're wondering where that went up in this market was $2.70 at $4.70. So that kind of illuminates what we've been talking about before, listeners. Liquidity in a lot of these less liquid names like Union Pacific has been, shall we say, stretched. And so market makers are not showing you their best hand, not even their second best hand out here. They're going $2 wide. What do you want to do? This guy coming in for $12,000, he got it off 20 cents off that already atrocious bid, 26 cents actually. So I guess you can say that's not bad. The real market was probably somewhere to be found in there, but he found a bid for $12,000 at $2.96, going up on the Philly. So this looks like, Mr. Meatball, someone perhaps fading a bit of a near-term recovery and deciding if it does indeed come to pass that they get up that 165 strike, they probably wouldn't mind dumping A, some of their stock at 20 handles higher. They'd be happy to do that. And B, taking a juicy nearly $3 off the table to do it. First off, what are your thoughts on this freaking $2 wide market we're seeing out here? And then B, what are your thoughts on this decent out-of-the-money call over right here in UMP, sir?
I mean, with the implied volatility in the pretty high percentile, you've got to say, yeah, I like that as a way of going long and carrying some upside. I could absolutely see this something merged with some stock and some sort of put spread. That would be a really nice trade to take advantage of what we're seeing. I'm a proponent of this. I think it makes a ton of sense. You're getting a 2% premium on the current underlying, and the strike price is almost, what is that? That's, call it 15% higher. Makes you're dealing with a almost 20% return if those get called away. Makes a ton of sense to me. I'm on board.
Yeah, not a bad one out here.
They probably could have worked the price a little better.
Yeah. That marker they got was atrocious. So, yeah. See, listeners, it's not just you getting these atrocious $2 wide markets for your 10 lots, 12,000 lots dealing with the same thing out here. Move on now to General Dynamics. Looks like we got a bit of a theme here to our odd block today, listeners. General Dynamics, ticker symbol GD, at about 137.75 right now, off about 3.25 or over about 2.33% out there right now. This is the name that a year ago was trading nearly 180s. 172 trended up to 180 pretty quickly. And again, kind of similar, very similar to our last name, kind of hovered around that level for the better part of the year. It got down a little bit, got up a little bit, but pretty much hovered around that 175 level for the better part of the year. Not really that exciting, not really blowing the doors off, just kind of hovering, doing its thing. And then, of course, that late Feb sell-off kicked in again, and this stock went from 187 down to, let's see, hold on, let me get this right. Yeah, this chart is eerily similar to what we just talked about there, listeners, going from 187 down to 106. So this one taking a drubbing as well, off 80 handles out there, then rebounding yet again up to 133 and change. So this is you can almost transpose these two charts. They look that similar here, listeners. Let's get out to see what our Eye of Sauron found out here. And looks, again, similar script out here. A lot of people having some similar ideas and similar names, at least from a chart perspective, not from what they do out here. General Dynamics, of course, an aerospace and defense contractor out there. Let's see. What we see out here, we see instead of the June 165s, this time it was the May doubles, the May 155s. Listeners going up 10,000 times for 120.1 out there. A little bit better than the bid. This market was a little bit more sensible. Listeners, this one was 120 at 180, so a wee bit more sane than the crazy $2 wide market our friend got out there in Union Pacific. This was opening over there on the Philly as well. So out to May 155, you're talking almost 20 handles north of where we are right now. That's about 12% out of the money. Worth noting as well, they have earnings coming up in this cycle. They are on April 29th, so they will be baked into this one. Mr. Meatball, kind of a theme here, almost the exact same chart, exact same performance, and a similar trade here. We've got, instead of the June 165s now, we got the May doubles. Are your thoughts the same on these, sir?
Yeah, it makes total sense. I mean, this is, with vol the way it is and upside implied volatility bid, this is the type of stuff that makes sense if you're already long. And if you're not long, trying to get in, selling puts, similar to the way I was bringing up U.S. Steel or Alcoa is the best way to trade that way.
These trades are eerily similar, even down to the IV, listeners. The Union Pacific IV was 37.3%. This one, 37.4%. So these are effectively the same trade almost, listeners. Just a little bit of difference in months and strikes. Kind of weird. And, I'll tell you what, since they're both so similar, we'll put them both in the to-be-watched category, and we'll see if we can return to these and see how our friends fare. Meanwhile, our last name here is a newcomer to the odd block. Talking about Switch, not the Nintendo Switch that a lot of you are probably getting a lot of use out of right now, but Switch Inc. This is the telecom out of Nevada. In case you're wondering, they develop super NAP data center facilities. So there you go. Ticker symbol SWCH, trading today $15.86, off about 11 cents, so not even 1% out there. This one's had a pretty tumultuous year. A year ago, it was trading about $10.70, then it rallied up to about nearly $17. Then that was in September. Then it sold off again by November down to about 14. Then it rallied right back up by the time February came around, February 20th, 21st, hit nearly $18, $17.83. That was its high for the year. And then we all know what happened after that, listeners. Took it right on the chin, sold off from about $18 down to $11.22. And then right back up again. Here we are again, $15.70 or so. So feeling that V-shaped recovery love like a lot of the other names we're talking about out here. Oh, and guess what, listeners? Our Eye of Sauron looks like found some upside call right, and this time as well. It was this time the May 18s. So $2 and change out of the money here. We're going up. The market here was 20 cents at 50 cents. So still pretty darn wide, but not going to get a $2 wide market in such a cheap option here, listeners. But still, 30 cents wide, pretty wide. We saw, again, all three Philly trades as well. Maybe a bit of a theme here. Maybe our Eye of Sauron was in a Philly kick today. But coming up here, they went up for 21 cents. This guy got a penny. 5,000 times here. Again, this is a 50% implied vol, about 50.1%. It's about 15% out of the money with earnings coming up in this one. Yeah, they're in this cycle as well. They are May 7th. So, Mr. Meatball, we got pretty much 3 for 3 here. Near upside, out of the money, earnings impacted call overrights. This last one here in Switch Inc. Are we 3 for 3? Are you down with this one as well, sir?
What it really looks like. I mean, who doesn't want to unload upside calls on Switch Inc. at pennies on the dollar after it's not like this. I mean, if you look. This a pretty interesting chart, right? They had earnings on right before everything fell apart, or actually as things were falling apart. So I guess the big question you have to ask yourself is, were earnings that bad, or is this just a victim of the overall market? Because prior to this sell-off, Switch was at a year high. It was actually at a 2-year high. So someone may say, hey, if this thing gets a pop, I want out of my stock. It totally could be that.
Could be that, and it could be Uncle Mike has some wit and or wisdom for us, because it's Monday. Let's find out. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block, the portion of the show where Uncle Mike gets on up there with a hot mic to dispense some options, wit, and or wisdom. Mr. Uncle Mike, what is it today? Is it wit? Is it wisdom? Or perhaps is it both, sir? What do you have in store for us?
Trying to give you a little bit of both. Got to keep our audience upbeat in the crazy times with which we have in our society. So what I want to go through today is understand what you're doing with your original objectives with your portfolios. So I know I've been saying this a lot on the show the last few weeks, but there's 3 sections of money with which I manage: aggressive trading, hedged trading, and buy and hold investing. And the buy and hold is probably the least of the 3. Not saying anything bad about it, but just have an understanding of what you're doing. So here's what I want to address in a couple of things. So first off, with aggressive trading, like I've said a million times, I've been in cash since the market went negative. Don't get me wrong, I would have loved to have been in on this rally the last couple of weeks, but my rules prohibit me from doing so, and rules are what have kept me in business for 15 years, though. With hedge trading, my lines in the sand are a ways away. But what I want to go through today is with buy and hold investing and when it can mix with options. And if you're holding a stock and you're planning on holding the stock until you retire, or let's say maybe you got in on it at a really early low cost basis and you're maybe just planning on giving the stock to your kids when you die, then I don't know if it's exactly wise to have significant option hedges on it. Now, every situation is different, but let me give you one example. Let's say that you worked for company X and you have a very significant amount of company X stock. And because of that, you have a lot of their stock and 95% of your net worth is tied up in company X. If you were to sell your stock in company X to try to diversify a little bit, you're going to take a bath in capital gains taxes. So in situations like that, I think option hedging would be a wonderful thing with which to do. And I think it's something to definitely consider as opposed to taking the taxable gain on your stock. Now, should you do it with all of it? Of course not. But should you do it with a portion of it? Well, it depends on your situation, but it's definitely something to consider and to talk to somebody about. Now, let's say that you have something in your portfolio that you believe is buy and hold. I have things like that in my portfolio. I have things like that in client portfolios. And if they're buy and hold, and I'm planning on holding them for a significant amount of time, and they're allocated properly, meaning I have a smaller percentage of my allocations in something that's buy and hold, and smaller can mean anything depending on your situation. In other words, if you know that you're not going to need that money for another 10, 20 years, and you're holding a stock with that time horizon, then I don't think it's wise to have options mixed with it for that reason. Because of the fact that if you're looking to try to maybe buy some puts because you're concerned about an event coming up, or a put spread because you're concerned about an event, or you're just kind of concerned with the times right now, so you want to do a vertical put spread because you're concerned with the downturn, you don't want to spend too much money on the option, so a spread is the right thing for you. I don't think it mixes, because then what you're doing is you're trading and you're not hedging. I think that what you should have hedged, if you have a portion of your portfolio hedged in the first place, then I think you should have already been doing that. But where I'm going with this is that if you have buy and hold investments, and you mean them to be buy and hold investments, unless there's a fundamental flaw in the stock, I think you should hold on to the stock and just ride it out. However, if you're taking significant hits to your portfolio and you don't feel comfortable with where it's at, then it might be time to reallocate and consider doing something different. If you're hedged in the first place, well, then that's hedged investing, and that's something totally different. And if that's the case, then you should have been hedged before this all started anyway. So where I'm going with this is that if you are in a buy and hold investment, I am of the school of thought that you should stay buy and hold unless there's a fundamental change to the stock. If you are in hedged investing, if you're looking to hedge yourself, then you should have been hedged already. So, for example, I have one young man. He is 25 years old, just got married, and he's a pretty high net worth individual. And so with him, he has a lot of buy and hold investments, just because of the fact that he can wait until retirement, and he actually can handle a downturn in the market for the time being. Of course, we have some hedged things, and we have some aggressive trades that we're in cash right now, and we have some other conservative things with him, of course. But with his buy and hold, we're waiting it out. Another client that he is 55 years old, and he has no buy and hold investments in his account. All of his net worth, all of his investable net worth is in an IRA. And so what we're doing with this gentleman is a simulated index concept to where we have roughly 70 to 80% of his money in bonds, whether they're government treasuries, whether they're corporates, kind of a variety, a mix of both. And we're trading aggressively with roughly 10 to 20% of his portfolio. When the market went negative on the year, I went to cash with the aggressive trading. And so in his portfolio, he's actually ahead on the year. And the reason isn't because of some ingenious thing that I did or anything like that. It's just that we followed the rules. We followed the rules based on the person's objective. We followed the rules based on what he was looking to do with his money, his risk tolerance, and where he wanted to go with it. The second client, the client that's 50 in his mid-50s, he's been with me for probably about 7 years now. We have a very good relationship. And I have a lot of other clients just like him, just from the standpoint that you want to have upside in your portfolio, but you're concerned with markets like what we've had the last couple of months. And so in his case, it makes a lot of sense to do something like our simulated index concept. For the younger client, he's a very high net worth individual, and a lot of his money is outside of his IRA. So for tax purposes, stocks make sense for him, as well as the fact that he has a longer time horizon until he actually is going to retire. So in his case, stocks make a little bit more sense. Don't get me wrong, we're doing everything that we can with setting up backdoor Roth IRAs and trying to trade options within those and doing stuff, so to speak. And don't get me wrong, this guy has plenty of option exposure. But my point is that have a plan and have an understanding of what you're doing before you get into situations like this. In that, if you know that you're going to buy and hold through the tough times, you need to buy and hold. Now, all of a sudden, your buy and hold investments go down and you decide, I need to buy some put options. I typically don't think that's a good idea. So understand what you're doing before you actually get into it. And that's the strategy block for today.
Hey, Mike, I do have a quick question for you.
Sure.
Or maybe Mark can answer this too. So what are the tax consequences on selling because the whole period for long-term capital gains is a year or 2 years? It's 2 years, right?
I believe it's 1 year.
Oh, it's 1 year. So if I sell a leap put in something like U.S. Steel, and then if I sell a Jan 2022 8 put at $3.10, and then I wait until this time next April and cover it, does that fall under standard capital gains? That's the one area in options I get a little confused. Or do I have to take delivery before that counts? I don't know if you know that. Obviously I know you're not a CPA, but what's your understanding of that? I think is the proper vernacular for that. Not advice.
Well, I've heard both on that one. And so I typically, whenever I'm doing plans for clients, if I ever plan on doing something along those lines, I plan on it being short term. Just because of the fact that I'd rather err to the side of caution with it. I've heard both on that. A vast majority, I would say 95% of the options that I trade, and this is just I can't back this up, this is just my quick estimation, but probably 95% of the options I trade are in IRAs. That's where you're really going to get your biggest benefit for options. That's my opinion on it. But whenever I'm in a situation like that, I always would err to the side of caution and plan on it being short term, even if it might be long term.
Even if the whole period is over a year. All right. That's great. That's your great outlook on things. Thank you.
Maybe we need to have an options tax segment one of these days. Not the sexiest of segments, but it's clearly an area where folks need some refreshers. Of course, long-term capital gains listeners. It's going to be more than a year out there. So a year and a day, you're good to go. Meanwhile, we're good to go. We'll see if we can squeeze in a couple of your questions here as we head on into the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. A lot of you chiming in with your just thoughts and opinions and general stream of consciousness in these times. Glad we can be an outlet for such things. We've got I like this handle. Fluid Trading. Fluid Trading says there's a very high risk reward with TVIX right now. The party is over. Backwardation not producing favorable long environment. Could change quickly if the market takes another fast leg down. Well, you guys know my thoughts on TVIX. We don't have to go on to that at length. I chatted with good old Dave, famous Dave, on the Short Vol show about all such things. He wants to talk TVIX on that show all the time. Not exactly my favorite instrument of late. Where is TVIX right now? About 250, 248 and a half or so. A far cry from the nearly 1,000 it was not too long ago. Yeah, I think the risk reward in TVIX is usually not that favorable, and it was very recently not that good at all out there. I'm never been a huge TVIX guy. Scott Somer, regular listener, regular commenter. About every show that we do. We love you. We love you, aggressive commenters out there. He chimed in. We mentioned Lukin Coffee before in some of our top 10s. He said, unless the Options Clearing Corp has come up with a very different procedure for Lukin, roughly 1.6 million shares of LK are going to move from put buyers to put sellers after today's expiration. I haven't looked at the OI in a while out there in good old LK. Let's see where LK is trading right now. Oh, at a whopping 439. So, yeah, it's been rough times out there for them, as you might imagine. Let's see. As of beginning of April, they were trading 26.20, and then pretty much got clipped down pretty aggressively. So, yeah, it's been a rough time good time for put buyers, not so much for the put sellers out there. STIPOD, maybe. Wants to know, have you heard about any more market makers blowing up out there right now? By the way, a great piece. Those of you who are interested out there in cranes of late, or our buddy Miss Merrick out there, she likes to dig into salacious stuff in the trading world. And when the trading firm goes out, she's going to dig into that. And she has an interesting piece about the death spiral of Ronin and what may have caused it. A little bit of VIX action going on out there, a few other things. Check it out if you haven't already. I have not heard of any other firms going out. But again, we've seen easing of the capital rules. That's helped. I think this bit of a rally helped take some of the pressure off as well. Ronin went out right kind of in the teeth of all this massive sell-off and explosion of volatility. We've seen a bit of a lessening of that out there of late, so that's certainly helped as well. So that combo, I think, has taken some of the pressure off. That said, Mr. Meatball, have you heard of any other trading firms going the way of the dodo since we heard all that about Ronin, sir?
No, not since then. I actually, everybody seems to have held up pretty well. It helps that the Fed bought every piece of distressed anything they could find. But yeah, I've not heard a lot. I think that the next shoe to drop was some of the high yield stuff. And if you look at a chart of HYG, some of that high yield got a backstop from the Federal Reserve for a short period of time. So not a lot there that has caused any blowouts. Part of the reason why the carnage has been so slow.
Yeah. I think that a lot of these things have helped over the last couple of weeks to ease the pain out there, STIPOD. But we've had our ears to the ground and we haven't heard anything, which is a good thing. We don't want these firms going the way of the dodo. We need them in times like this, and we need to wrap up the show. So let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we watch, or tell you, I should say, what we're watching for the rest of this week. I hit it on the top of the show. Let me just hit it again really quickly. Big earnings week this week, kicking it all off. A lot of financials if you're into such things. Got JP Morgan Chase, Wells Fargo on Tuesday, as well as Johnson & Johnson Wednesday. B of A, Citi, Goldman, PNC, U.S. Bancorp, and Bed Bath & Beyond. Thursday, we got Rite Aid, Abbott Labs, BlackRock, BNY Mellon, KeyBank, Charles Schwab, and so on and so forth. And Friday, everyone's favorite, Citizens Financial Group out there. So a lot of financials and a few COVID-related names popping off this week. And we're getting actual tangible numbers out there so we can see for the first time really how bad the damage has been. And, of course, more importantly, going forward, how bad they think it will be on their businesses. So let's go back around the horn. Let's start with the Uncleist of Mike. Mr. Uncle Mike, sir, what are you watching for the rest of this week until we can gather together here on Thursday?
Well, just watching to see if we can get through the 50% retracement numbers towards the end of the week, hoping that we can get through the 280 mark on SPY as well as the 2800 mark on the SPX. So looking for that. Also looking to see just where we can get this curve flattened. Hopefully that happens, and we as a society can get out there and get back to work. I got made fun of by my other people at RCM today. They say I have so many online clients. They're like, Mike TOSAW. He's like, what virus? What's going on? Something happened? Because they all claim I never leave the house anyway. I just sit and look at my computer. But
that's true.
Looking forward to getting out of the house.
He does that, listener. So if you want someone who just sits there watching the screens all day, maybe you give him a call. We'll get to that in a second. But first, Mr. Meatball, sir, what is on your radar for the rest of the week until we gather together here on Thursday?
You know what's funny? Actually, Mike, speaking of the house, I obviously we've been stuck. My older boy asked me who the strongest person I know is. And I said, I don't know. He goes, Mike TOSAW, maybe? I said, maybe.
I'm flattered.
That's hilarious. I love that.
I will be doing a pretty decent sized product launch in the next couple of weeks. Be on the lookout. But if you want really good blog and VIX contact, make sure you check us out at optionpit.com. And, of all the social media places that you can find us, YouTube, Facebook, Twitter, we're even on Instagram. One place you'll never find us is TikTok, because I don't want the Chinese stealing all of my great trading ideas.
There you go. He already did his plug. He's ahead of me. And so head on over to optionpit.com to find out. I got to head on over to the Option Pit household there. Show off my bench pressing skills. Giving all this love to Uncle Mike out there. But that is a pretty funny story. Optionpit.com is the place to go to learn more. And Mr. Uncle Mike, if they want to call you up, maybe they want to hit you up about, what's trading, maybe have you watch your screens, or maybe just talk about your bench press. Where should they go? What should they do?
Hey, you want to talk bench press, and we'll get into that another time. But feel free to go to my website, stcharleswealth.com, or give me a call directly, 630-885-0017. If you want a financial advisor who actually can say that he was the first 17-year-old to squat 800 pounds.
Wow.
Well, there you go. Uncle Mike TOSAW, he's the guy to look for. stcharleswealth.com is the place to go. So again, MAGA trading hat, sweet vol trading club, optionpit.com, bench press discussion, and or your portfolio discussion, stcharleswealth.com. If you like all that good content coming from us, or those earnings, move reports, all that good stuff, theoptionsinsider.com is the place to go. And speaking of going, you don't have to go anywhere right now if you want a little more in your ear holes. If you're listening live, we'll pump some fun stuff in there, maybe talk about some pandemic-oriented vol for all of you. And then we'll be back in exactly an hour with the folks on the technical side. Talk what's going on out there in the crypto vol and volume and volatility space. So stay tuned for that. Otherwise, we'll see you back here later on this week. A lot of great shows hitting the tape this week, including OPR, all that good stuff. And we're back together on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.